everyone, and welcome to today's masterclass. I'm thrilled that you're here today with us. And you all know that we occasionally host the sessions, I think once a month, sometimes every 3 weeks, depending how many guests we have in the pipeline. So before we dive in, as usual, some housekeeping items. Please use the Q&A box if you have any questions throughout the presentation, and we'll try to answer all your questions live. If we miss something, please feel free to email me at pinky@loombainvest.com. And I'm going to have a small little disclaimer as well. All right, so this session is strictly for knowledge sharing purposes and should not be considered as a legal, accounting, or investment advice. And this session does not represent an offer to sell or a solicitation of an offer to purchase an investment or security. If you have any investment-related questions or any financial advice you're looking for, please reach out to the appropriate party, your CPAs, your attorneys. But this session is strictly for educational purposes. And I wanted to introduce our guest today, like I mentioned earlier. I'm so honored to be joined by David Lindahl today. He's one of the celebrity guests that we have, and he's a nationally recognized real estate investor, entrepreneur, and educator. He has owned and managed thousands of units across the United States. He is the founder of RE Mentor, where he has taught countless investors how to scale their portfolio. So Dave is also author of 2 best-selling books, including Emerging Real Estate Markets, How to Find and Profit from Up and Coming Areas, and Multifamily Millions. I think I got the names right for your books.
Yeah, so I also co-wrote Donald Trump's only #1 best-selling book, which is Commercial Real Estate Investing 101.
There you go. Awesome. So he has also helped thousands of investors recognize opportunities before they go mainstream. And today he's going to break down the power of RV resort investing. So our topic for today is how to build wealth and freedom with RV resort investments. So welcome, Dave. I'm super excited to have you with us today. I know
Yeah.
it's going to be a powerful session. So you have the sharing sessions. Just take it away.
Okay, so I'm going to share my screen. Welcome, everybody. Good morning, good afternoon, wherever you may be. And I'm going to jump into my PowerPoint here. And all right, get out a pen and a paper. Get ready to take some notes because they're going to give you some really, really good information. And then by the end of it, you can determine whether or not RV parks is something that you want to get into and invest in yourself as well. Most people know me as the multifamily guy because I started teaching people how to invest in multifamily properties way back in 2002 after I started investing in it myself in 1996. And it took a dirt poor landscaper who was living in a 1-bedroom apartment to somebody that owned over 10,000 units in 27 different markets around the United States. So as we built that multifamily portfolio, we also look for other opportunities because once you get good at something, you're always looking for other opportunities to get into as well. And I focus on the real estate space. I have done other businesses outside of real estate, but I started buying commercial properties. I started buying storage units. We started going after office complexes. Each one at the right time in the cycle. So when the opportunity appeared, then we went after the opportunity. At the same time, sticking to our base, which is multifamily. So how did I get involved in RV parks? Well, first of all, this is what we're going to cover today. Why RV parks is where the alpha is in today's market. And like I said just a little bit earlier, the multifamily market's changing, and it's getting time to start to run in that market, get your ducks in a row. But at the same time, you can still get alpha in another market as well, which is RV parks, which is, if you've ever heard of doing roll-ups on a fragmented industry, that's how people become very wealthy. There are corporations that are starting to roll up RV parks, and I'll tell you why during this presentation and what the opportunity is. We'll talk about multiple revenue streams from happy campers, what amenities to use to fill a park to bring in additional guests and to create more revenues for you and your investors. What are the best parks to buy and why? Who are the best owners to buy from? Why it's an owner finance market right now with RV parks. And then we'll talk about the 3-step formula to success when investing in RVs. So the big discovery for RV parks for me was These are my kids. They're just about 3 years old now. You can't see my son. He is in the rocker. This is at the base of our house in North Conway, New Hampshire. And that river, this is just in the fall. So the winter run has already gone by. My house was up on this hill. It was about a 30-foot drop. And my big fear is one of my kids was going to roll down that hill and into the river during the spring, and then that was the last I would see of him. Not only that, it wasn't a huge house; it was a second home. It wasn't big, and I wanted to be able to. Now that I had a family, I wanted to be able to invite other families over as well. To go up to the mountains for the weekend. So, being the market cycle guy, I I looked at the market and I realized that in December 2019, it was the top of the market. So I thought, I'm going to sell this house on the river and I'm going to buy a ski in, ski out a mile down the street, which was at Attached Mountain. And then instead of the river, my kids, the backyard would be the whole mountain, which would be awesome. And then that was 2019, in December. In March 2020, we all know what happened. The whole world shut down and everybody headed for the hills, right? So that property that I thought I was going to get at a discount if I just waited a year doubled in price. So in the meantime, I started taking my kids all over New England during the summertime. We went to in the spring and the fall. We went to farms in Vermont and Maine. We went to cottages in the mountains. We would take a yearly trek to Martha's Vineyard every year. We started going to amusement park places where we'd stay for the weekend, water parks everywhere. And then we discovered yogi. And the way I discovered yogi was this campground was right up the street from that house or that river that I just showed you where I had my house. And near this, on the other side, was this place called the Red Roof Inn, and they had an indoor water park. So we went to the indoor water park during the winter so we could hang out, get warm, and swim. And I went to run one morning, and I thought, oh, I'm going to run through the old RV park. And as I'm running through it, I realized, oh my gosh, they've made a lot of changes here. There's a water park inside the RV park. I see yogis all over the place. Apparently, Jellystone, this franchise bought it. And I thought, I'm going to take my kids here. So I did. I took my kids and we had the time of our life. It was a lot of fun. But being a real estate guy, I started noticing all of the revenue streams. And there wasn't just a few revenue streams, there were multiple revenue streams. And I thought, this business, it's got to be a cash cow. So I thought, I knew there was a park about 45 minutes from my house. And I thought, I'm going to check out that park and see if there's a possibility of potentially buying it or, see what the opportunity was. So first I was going to go there with my kids, and check it out while I was staying there. And when I called for the reservation, they said Jellystone. And I thought it wasn't a Jellystone when I drove through, about 2 months ago. So I said, did you guys just change over to the Jellystone franchise? And she said, oh yeah. She says the park was purchased by so-and-so company. And I said, oh, do they own the one up in North Conway, New Hampshire? And I said, oh yeah. I said, how many do they own? And he said, oh, he owns about 28 now. And I thought 28, that was that gave me the proof that, there's an opportunity here. So that one was already purchased, so it was too late. But I started looking around to invest in campgrounds, and I told my partner Bob, I was like, Bob, this is crazy. The amount of cash flows in these parks. It's just it seemed like it was obscene. And not only that, right? There was never any gouging going on. And I was happy to contribute to all those revenue streams because it was a lot of fun. And I'll go over the different revenue streams, but it was a lot of fun for me and my kids to do that. And we've been going to Jellystone up in North Conway ever since. We do visit other parks as well. We do visit our own parks that we bought. But I mean that we continue to go back to Jellystone because it's so well laid out up there with the other ones. So. From multifamily to campgrounds, we are in this transition period. Sellers are starting to come to the table with multifamily properties. When multifamily pops, it's going to be big. But in the meantime, the one-offs, there's a lot of opportunity in campgrounds. You can be getting one-offs on multifamily now until it really starts to run, which that will be relatively soon. But you can also, there's a lot of opportunity to buy parks that cash flow like crazy. So this will give you an example of the growth since 2015 of the market for RV campgrounds. It is just it's a curve going to the sky. Okay. So one of the reasons that this is such a good industry right now is because the age demographic is trending younger and younger, which means that there's longevity for the business. It's not just the retired people that are going camping now. All right. It's the younger generation that are coming in that want to be closer to nature. And there's a lot of other people. There's what's called the digital nomads now are staying in campgrounds as long as they're within 20 miles of a city. There's a lot of different submarkets of campers, and they all have their different criteria. And much like in an apartment building, where you take a look at the building, you take a look at the 3 mile radius around the building, and you look at the demographics, and that would determine, who your key demographic is going to be, and you want to make sure that your apartment building fits that demographic. Well, the thing with RV parks is you'll take a look at the RV park and you'll determine, what is it near? What is its proximities? Is it near a national park? If it's near a national park, you're going to get a lot of overrun because national parks typically run close to 100% occupied and definitely 100% during full season. So you get all of the overrun from that and you'll be able to charge higher prices. Are you in what they call a corridor? There's certain corridors, like over in Colorado, there's an RV park corridor where just a lot of people go. They go to vacation, and it's an opportunity. So it all depends on where your park's going to be, and that will determine who your demographic is going to be. But also, the number of households purchasing RVs is increasing every year as well. So the industry's growing, which is good. So here's the best part about this whole thing, and this is why it's such a big opportunity. The parks are owned by families 20 plus years or more, the majority of the parks. 80%, I don't know if I have this hit next. Yeah, 80% of the owners of RV parks are 60 years old or older, and they've owned the park for 20 plus years. And most of the 60-year-olds haven't kept up with technology. They haven't kept up with the marketing. They pretty much own those parks free and clear. Okay, they're cash cows. They're happy about that. They're looking to, they get to a point where, okay, it's time to sell. A lot of them are owner occupied, meaning they'll live there for the season. They're getting older, they get burnt out. And it's a really big opportunity to purchase. So they've got unsophisticated operations. And they're going to be your best deals because you can do owner financing. Why? Because a lot of them own the parks outright, number one. Number two, they're used to getting this cash flow month in and month out while those parks are open. Even up in the northern areas where the parks are seasonal and they're closed for, say, 5 months out of the year, they're still used to getting a lot of cash flow coming in. They really don't want to lose the cash flow. And they know if they sell it, and they take the full amount, they're going to get a big hit on their taxes. So they're willing to take owner financing, some at no amount, some at a much smaller amount, some at an amount, and then take the payments after that. So they don't get the tax hit, and they still get the monthly payments that they were used to getting. So this is why this is such a big opportunity. 80% are owned by 60-plus-year-olds. They've owned it for 20 plus years or more. The next generation doesn't want it because, they've seen how hard their parents have had to work to maintain those parks. They haven't kept up with the technology, the upgrades. I mean, there's two things that you'll find in these parks that are money makers for you. Number one, if the internet is not throughout the park, simply by increasing the internet to increase to a point where everybody gets it, and these things are usually outside. Of course they're outside, but they're like in the woods, in the backwoods a lot of times. And internet is really hard to get out there. But now with Starlink, you can pretty much put internet anywhere. So you put internet in a park that didn't have it or had really bad service, and all of a sudden you're going to increase that occupancy in that park because everybody wants to be connected to the internet. That's number one. Number two, the electrical infrastructure hasn't kept up with the RVs, the size of the RVs. The RVs keep getting bigger and bigger. There's more and more options. You've probably seen it in RV that all of a sudden pops up, pops out, pops behind, and it becomes this, this big area of living. Okay, in order to do that, they need increased voltages. Most of the RV parks are on a 35 voltage, and they need to be upgraded to 100. You incorporate this upgrade into when you're figuring out what to buy the park for, and then all of a sudden you just increase your renting pool for people to come in because now you can support those larger RVs. So this is the base of the opportunity in the marketplace. So we are early. All right, because we're early because 80% of the people are 60 years old or more. Okay, but look, Starwood Properties knows about this and they're starting to buy. And this guy, his company is starting to buy it as well. So I don't know if you realize, but Warren Buffett started buying mobile home parks probably about 10 years ago. And if they're not the largest, they're close to the largest mobile home park owners in the United States. So he sees the opportunity in the RV parks. The RV parks and mobile home parks are completely different, by the way. So he sees the opportunity in RV parks and he's in it as well. So is that good or bad? It's good because if you're going to do a roll up like we're doing, okay, you're gonna sell that roll up to somebody, right? You have two buyers that are ready, willing, and able to buy your roll up, but they're looking for specific types of properties. Okay, they're looking for properties that are 35 acres or more, that have 150 lots or more, and have some sort of a water amenity. Maybe there's a river running through it. Maybe it's on a pond or a lake, which you will own when you buy the park, or maybe it has a water park in it, or maybe it has a combination. But a water amenity is almost a must when you have an RV park. This doesn't mean that you have to fund, any park that you buy has to meet these criteria. These are just the parks that if you're going to do a roll up and sell, this is what they're looking for to sell. I've seen parks that have 70 lots, 50 lots that are huge cash cows. Okay, so it doesn't matter really what size you buy. What matters is if the numbers work. In any type of real estate, it's the same thing. Do the numbers work? If they work, great. If they don't work, then as they say, and what my Chinese bartender used to tell me, if it doesn't work, not much you can do. It was actually, all right, I get the side story. This guy, Johnny Lee, he owned this place called, it was a Chinese restaurant. Anyways, and he used to have bands on Saturday nights, actually Fridays, Saturdays, and sometimes on Mondays. And I was in a band. I was in a band since the time I was 16 years old to the time I was 24 years old. I was lead vocals. And we would always say, Johnny, let us play. Johnny, let us play. So one time, Johnny, probably tired of us begging him to play at his club, said to us, he says, I'll tell you what. He says, you come on a Monday and you play. And you good, you play on a Saturday. He says, are you no good? Not the much you can do. So that's the way we look at this, right? If the numbers don't work out, not much you can do. But if the numbers work out, doesn't matter what size it is, you can buy the park, you can make money off of that park and add it to your portfolio. So game plan. Take over, it's always, in anything, we're always basing everything on cash flow, okay? We're not trying to be speculators. I'm a conservative investor. I want my property, whether it be multifamily, whether any type of property, RV parks, I want it to cash flow at closing, okay? Unless I'm doing, this value add that I just know it's going to rip, okay? And I'm willing to, and value add should be about 30% of your portfolio anyways. So on RV parks, take over based on cash flow, increase the amenities. You increase the cash flow, increase the marketing, increase the cash flow, increase the cash flow, increase the value. That's the game plan. There are a number of different amenities that you can be adding, whether it be jumping pillows outside for the kids, whether it be shifting. I'll show you some pictures of these things. Shifting for some or sifting for some rocks, which is a profit center. There's all different types of amenities that you can add that a lot of the parks, the older parks, don't have right now, just because that they didn't need them. Their cash flow is great. Also, the marketing. I can tell you from analyzing a lot of different parks, the majority of these parks, they may be using social media a little bit, but they are no way using social media to its max. Their marketing plans very, very low. They're basically relying on the people that used to come again, or they'll put it into a directory and they'll get reservations that way. There is a whole thing. I created an RV Park Riches course. In the module that we have on marketing, it was a 2-hour presentation in a 110-page section of that particular home study system. And that's because there's so many things that you can do to bring in revenues. So, increase the amenities, increase the marketing, and boom, you've increased the cash flow and increased the value of the park. You've increased the cash flow over and above what you bought it for, because you're always going to buy it based on the actual cash flows now. So let's talk about those multiple revenue streams. First of all, simple store improvements. I've been into a lot of parks. Nobody that I see does it really better than Jellystone. So we've always modeled our parks after. This is a picture of the Jellystone Park in North Conway. I mean, you just look at all of these different things that you can get there, but it's very, very strategic on what they do. And these are all the different improvements that you can do. You make sure you have the essential items, the convenient items, the local and unique products, the seasonal adjustments, which a lot of people don't do, the inventory management, which AI and technology now, you'll know exactly what's selling, how much is selling, and when you need to restock, almost like the way Walmart used to do it, but you can do it at a local level right inside of your RV park. Profit optimization, selling the high margin items, avoiding low turnover products. You can bundle store items with reservations. Just like McDonald's says, would you like fries with that? Okay, we've got a park where we've got a mascot. His name is Henry. Okay, he's a swan that lives in the lake. And so when people come, we say, "Oh, would you like the Henry upgrade?" And they're like, "The Henry upgrade is like, yeah." Every Saturday we do dancing lessons to Swan Lake. If you've ever seen the ballet to Swan Lake, so all the little girls love it because we upgrade them to a little tutu, and then they get a hand thing as well, a wristband, and then they meet on the Saturday. But it's an upgrade that they pay for at the time of reservations. And we've got stuff for the boys as well. We've got hats from them that say, and T-shirts with Henry's picture on it. But anyways, so you can bundle items in the reservation as they come before they even come in the door, which is good. The store layout's always important, and then the additional services for online store pre-orders. They can pre-order the wood to be on their site when they come over. One of the biggest margins is wood, and they can pre-order groceries to be inside of their camper when they come. All these are amenities that are available to the campers even before they come through the door. So then we have different types of rental options. We've got golf carts. A lot of the parks are underutilizing the amount of golf carts they have. You can get a golf cart for about $8,000. It rents for $100 a day. Typically pays itself off in a year and a half. Okay, and then you own those things free and clear. With a 10 to 12 year lifespan, you've got profits that are coming in regularly behind that. If you're on a river or a lake, you can do tubes, you can do kayaks. You can do paddle boats, bikes, e-bikes. You can rent the bed sheets. I remember first time at Jellystone, I remember after, when I was signing up to that week online, after I signed up, it said, "Would you like bed sheets?" We got a cabin. All right. So it was like, "Do you want bed sheets for the beds in your cabin?" It's like, yeah, that would be a lot easier than trying to haul them all down there with all the rest of the stuff we got to bring for just $3. $3 a set. $3 a set for the bed sheets and the pillows. It's like, that's a bargain. And so we did it for each bed. And it's just another upgrade. Another upgrade is, which after they give you the site map and then they have you choose your site. Okay, and then you choose it, and then all of a sudden it pops up. "Oh, would you like to? What's the word I'm looking for? Well, for $25, they can get. Oh, would you like to guarantee the site?" So for $25, you can guarantee the fact that you're going to get that site after they gave you the site map to look it up and decide which one you want, which I thought was like, damn, it didn't leave me with a good feeling. One thing you always want to do is leave people, if you're going to take money from them, leave them with a good feeling that you took their money. That's one of the few things in the RV parks that didn't leave me with a good feeling, since I felt like I got sucked into that one. But anyways, it's one of the opportunities that these parks are doing to raise their revenue streams. So there's lots of activity fees that my kids love the activities, painting little birdhouses, doing ceramics, tie-dye t-shirts, making their own pizza. It's just a lot of fun. Everything that they do, they're not gouging. These things cost like $5 each, okay? And they supply the paint. And they just have a lot of fun doing these activities. And every day there's 2 or 3 different activities that the kids can do. Another one my kids love to do is the paintball. These are my kids right here, actually. That's my daughter. That's my son. Oop, and that was my other daughter over there. This is the gemstone mining. For $12 or $23, okay, you can buy a bag of dirt and rocks, basically, and then they call them gems, and they give you a gem chart. And then the kids, they sift it. The water goes down there. The kids sift the gems out, and then they figure out which ones they got. the gems have got the cost. Well, I know what they cost. They cost $2 a bag, right? And you're charging $12 a bag. So you got $10 profit margin on those gems. And the kids absolutely love it. Every time they got to sift through the gems, right? They don't even care about them afterwards. It's not like they save them. It's not like they save the rocks or anything. They just like the fact that they're like sifting through, and it's like they get the dopamine hit when the gems start to show, and it's a profit center. There's a lot of different profit centers. This is a water park. These typically cost $1 million or $1.5 million to put in. But if you do the numbers of the park and the park supports it, and you set this up right at the very beginning, you can certainly have a water park, or you buy a park with a water park on there. But it's an amenity that people absolutely love. And not only now you're not charging people to be in your water park, but what this water park is doing, because this is how you choose amenities as well, is this water park attracts more people to your park. Okay, so it increases your occupancy, and it also increases the length of stay at your park. So those are the two things that you're looking for when you're thinking about putting in an amenity. Of course, the cost factor and how fast you're going to get that cost. Your return on investment. But that return doesn't just come in dollars. It comes in length of stay, and it comes in increase in occupancy. Also, there's themed weekends. This is the 4th of July weekend, which is always a lot of fun. I forget what this is called, but in India they have this holiday or time where they throw chalk at each other. We do that at our parks. It's a lot of fun. People love doing that. They'll come for that. You can theme every single weekend from May till October, if we're in a seasonal park, with some fun thing to do. We do carnivals. We do pirate weekends. It's just a matter of what you can think of. Other amenities in your park. This is a jumping pillow park. This is like a must. Kids absolutely love these jumping pillows. So they're always added to parks that we buy. This is Gaga Ball, which I never heard of until I started going to these parks. Kids absolutely love Gaga Ball. Doesn't cost too much to build one of these Gaga pits. But again, do the kids have fun? Yeah. Are they going to come back because they've had so much fun? Yeah. So what does that do? It increases the return visit, it increases the occupancy, and increases the length of stay because there's so much to do. They don't have to, when we go to some of the different parks, and what we try to do at our parks is we try to make it that a 4 or 5 day stay, they've got so much to do that they're not really looking to go outside of the park, for the different attractions that might be out there. We've got enough for them to do for 3 or 4 days just inside the park. And then if they want to go out and see the other amenities or attractions that are in the area, that increases their length of stay as well. It's all strategic. So we have the common ball fields that all parks have, the playgrounds. Ping pong is a must. It's a must for me anyways, because I grew up going to campgrounds. We just go up to Papoose Pond up in Maine, and we played a lot of ping pong up there. And so in volleyball as well. But again, it's all things that with the ball fields used for kickball, it's all things that the kids can have fun with, and even the older kids can have fun and people want to come back for. So I've got a lot more to talk about. I just want to very briefly tell you about RV Camp Brown Riches. It's a 10-week training program that I created. Take you step by step through this entire process on how to buy RV parks. There's 10 modules, there's implementation tools, there's 70 plus resources, handouts, checklists, forms, marketing templates, and weekly Q&As with me as you're going through this process. So one of the bonuses is I call it the $1 million value add implementation plan, which is it takes a look at your park, and it analyzes the opportunity and the implementation guide on how much it's going to cost and what your ROI is and what the length of stay typical is. And so it analyzes the ROI and the implementation process step by step. So there's a tool in here. And basically you can go through your park, look at the left side. These are all the different amenities that you look for to have in a park. You may not have all of them. If you have a park that has very few of them, that's really, really good. If you have a park that has several of them and they need to be replaced or they can be upgraded, that's good as well. But if you look across the top, it's the initial investment, it's the operation cost, the space required, revenue potential, guest appeal. Guest appeal means that they're going to stay longer or come back. how long it's going to take to implement, the life expectancy, the ROI, and the complexity of it. And you just simply walk a park with this checklist, okay? See what it has, what it doesn't have, and then you determine what your budget's going to be first year, second year, third year as you turn this park around. So it also has revenue optimization strategies. One of the things that you're looking at, and Vinky, actually, if this is something you're interested in, Vinky has a link that you can go to. I should probably give it to you at the end, and I'll talk
Yeah,
about the other
I put in
categories.
the chat already for a link as well.
What's that, Vinky?
I put a link in the chat as well as
Oh,
you.
okay. All right. So let's talk about the different types of accommodations because it's not just go with a camper now or go with an RV at an RV park. Now there's different types of accommodations that you can get when you're there, and they're all upgrades and upsells. Like for instance, this is a yurt. All right. So instead of being in a tent, you can actually upgrade to a yurt. This is what it looks like on the inside. That's what it looks like on the outside. A little bit more comfortable than popping up a tent or potentially being in a camper. Could be a little bit more warmer. Some of these come with heating units. This is what we call a glamping tent. Okay, this is the safari style tent where you've got a bed in there, you've got a little porch out front. There's usually a bathroom very close. There's not a bathroom in there, and there's usually a microwave. It's got electricity, so people upgrade into these. The return on investment on these is very very quick as well. You also have this is what we like to stay in. We like to stay in the cabins. It's basically a trailer. All right. Now these trailers cost anywhere between 50,000 and 80,000 to put on site and to get the septic in because these have bathrooms, these have heaters, these have AC units, they have TVs in them, they have beds. And so you'll get your return. Typically, the return on one of these investments is under 3 years. So it's a really good return. And then after that, you own it for, the life of the product, which is typically 20, 25 years. So your return on investment on these is substantial. So it's just a matter of determining, what you want to do with your park, and then phasing it in, the upgrades in, cash flow, cash flow, cash flow. These are the RVs. This is why you need to upgrade from 35 to 100, and why a lot of owners, that don't do it, don't get the RVs like this to come into their park because they just can't. So a breakdown of the most common model of an RV park is 25% RVs, 64% tents, 11% cabins. All right. And then again, you mix in the upgrades of the yurts, the safari tents, the cabins themselves, and you start increasing your profits. As a matter of fact, you go site to site. This is what we do. We'll go site to site and we'll determine what is the best what is the best sleeping apparatus to put in this site. If you've got a site that overlooks a water or has a water view, put a cabin in there because you'll get the most for that site. If it's a tent site right now, then there's a big upgrade there, and you're going to be getting a lot more money from that site once you put a cabin in there, or even make it so an RV can get in there as well. So that's what literally site to site, you'll go and you'll determine how to make the most money. Another thing that we do in the RV parks is we use dynamic pricing. So just like the hotels do, it looks out there and it sees what the occupancy rate is for a particular weekend. And if it's higher, the demand is higher, then the prices go up. If the demand is lower, then the prices go down. So it's dynamic pricing. So you're getting the maximum dollar for each weekend that park is being rented out, weekend and week. So here's the opportunity on the marketing side. Most of the sellers are older, like I said earlier. They're not doing a lot of social media. Maybe they're doing Instagram, maybe they're doing a Facebook post here and there. They're not doing any paid search. They have no idea how to do that. A lot of them aren't in the campground directories, which if you just put yourself in a campground directory, you'll be in 11 different sources. They're not collecting emails, which is surprising because your past clients are your best clients. They've already been to your site. They know what it's like. They like it. They're more apt to come in the next year and rent from you again. And they're not doing what's called Google Business Templates, which will get them on the top of the search as well. Just changing the way that a site is marketing increases the ROI dramatically on a site. So you can buy based on the actual numbers. Okay, go in there with a new marketing package, and then from that marketing package, you'll see those numbers increase dramatically. So you'll be happy and your investors will be happy because on the actual numbers, they still cash flow like crazy. And then when you increase the marketing package and you increase the amenities, it's gonna cash flow like really, really crazy. This is one of the properties we own. This is a Country Acres campground. This is 200 plus sites. When we first came out with this site, we came to our investors. This is closed. I'm not looking for any investors in this. But when we first came out, we projected a cash on cash return of 13.8% coming out of the gate for our investors. We projected the AAR of 31%. That was conservative. That was before the marketing package. That was before we changed over the amenity package. We knew where it could go. We knew the returns were going to be crazy, but we didn't think we could go out on the street and tell them about the crazy returns because we didn't think people would believe us. Number one. Number two, we wanted to come out more, especially in the multifamily space right now, where people are happy to get a 7% cash on cash return, the investors on their deals. We knew we could blow away anybody that was out there trying to raise money for an apartment deal because we're going to double the amount of cash on cash return that the investors would get. But again, we would much rather come out conservative and then blow them away with the cash flow later on, because are they going to go into our next deal? Yes. Are they going to tell their friends about it? Yes. So it becomes a cash capital generating machine when you go out conservatively. But you look at these numbers and they don't look conservative, but they actually are very conservative when you see all the different opportunities that you can put into an RV park. So it gets even better because it doesn't include the nightly site rentals from seasonal to rental. All right. So what I mean by this is there's a certain proportion of your property that's going to be seasonal rentals, which means they come in at the beginning of the year and their RV stays there or their camper stays there to the end of the year. Okay. And they pay monthly rent. It's a lot less because it's guaranteed, it's monthly. And you get that cash flow coming in. Now, it all depends on what type of a park you have. If you have a family-oriented park, you want to get the amount of rentals that we call them transients, actually. Okay, so you have seasonal or transients. You want to get the number of transient sites higher than the amount of seasonal sites because those transient sites are going to give you more money per site night, number one. And they're also going to give you more daily spend than the seasonals because the seasonals come in at the beginning of the year. They get all their supplies. They supply up. All right. They don't need golf carts. They don't need wood. They get their own wood. They don't need, they probably know where the local grocery store is. They go to the grocery store instead of coming to the camp store. So they're getting all of their stuff. Yes, they are spending some per day, but they're not spending near as much as mama is keeping her kids happy during the day. So that's why we'll take a look at a site and we'll take a look at a campground, and then we'll look at the seasonal to rental ratio. We'll take a look at who our demographic is, and we'll determine how much we can tweak that towards the transient side than it is now. And that right there is just a big win for you. It's a big win for your investors, and it's another way to create a lot of cash flow on that site. So here's the 3-step formula for getting ahead in RV parks. Number one, do a market analysis. And it's not difficult to do now with AI. One of the things that I incorporate inside of the home study system or the online system is AI research. I mean, you can, with the right prompt, if you're familiar with AI at all, you've got to prompt it properly. When you prompt it properly, you get really good results. When you ask it general questions, you get general results, which aren't that great. Typically, it takes a long time to get a really good prompt. You put your original prompt in, you look at the results. If it's not quite what you're looking for, you do what's called iteration. Then you iterate, you look at the results, you iterate, look at the results, iterate, look at the results. In my experience through working with AI almost every day, to get a really good prompt for like a market analysis, you're typically iterating anywhere from 14 to 20 times before you get that prompt. So one of the things we do in the online class is I give you that prompt and I explain exactly why it works. All right. And you put in the prompt to an AI, whether it be ChatGPT, Claude, Grok, Gemini 2.5 research. You put it in there and it will do a market analysis that typically would have taken anywhere from 7 to 10 days. In about 7 minutes, it will tell you who your competition is. It will tell you, the number of the land area, the number of sites they have, the amenities that they have, and you can determine how you're going to compete against them. Number one. Number two, you're going to determine, are you priced properly against them as well? So number one is a market analysis on who the competition is and what you're near. And through that market analysis, you can determine what the opportunities are in that park. Step number two is create a custom amenity package. So you take a look at the park, you see what the amenities are. You will put. I'll show you how to put that the amenity implementation plan that I showed you earlier, the bonus, how to put that in the AI, right? You take the operating memorandum from the park, you put the two in there, and it will instantly tell you what this park is missing. Sometimes if the operating memorandum isn't complete because owners, a lot of times don't really realize, what the value is on a park and what to put in the OM. All right. You take a walkthrough in the park, and through your visuals, you also put that in there as well. You create a ChatGPT project, right? You put that in there, and instantly it tells you what amenities, not only the amenities that should go in to the park to increase your revenues and profitability, but which amenities will go in the fastest and give you the highest return, because that's what you want to do. You want to put in the ones that you can put in fast and that will give you a return coming right out of the gate. And then it will rank them in that order. And that's the way you add them into your park. And then step number three is the create a custom marketing plan. So basically, I'll show you in a prompt on how you can put in what the park is doing now. Okay. And then all you got to do is put in the materials from Chapter 7. Chapter 7 is a 110-page module on all about how to market an RV park. You put that in there. You put your park in there. You put the operating memorandum of the park. You may want to put additional information that you want the AI to know about your park. And then 4 to 7 minutes, you have a complete marketing plan on how to kick ass and get and fill that RV park, way over and above what it is at that particular time when you're buying it, and you're buying it on actual numbers. This is the advantage. We got two advantages here. Number one, we're buying from people that are not AI savvy, they're not tech savvy, and they're just comfortable. Okay. Your advantage is the fact that AI now puts a PhD partner on your team, as long as you're talking to it properly, and talking to it properly is using prompts. So you can confidently go into a deal knowing that you've got a winner, and not only just a winner, sometimes it's a grand slam. In apartment buildings, we're always looking to get singles, get signals, because you can get rich off of hitting singles, and then you're looking for those grand slams that come every once in a while. With AI now, you can hit grand slams on a regular basis. Like, we won't even go into a park now unless it's a grand slam, because life is short, right? Why struggle? Why go into something that you're not quite sure about? It has the bones to be a good park or a good investment, but you're not quite sure. So you struggle through it, and you iterate in real time. You iterate on what to do and how to do it to make that park more profitable. Why? You've got AI now where that will be your partner. You can put in results every day of what the park is doing, the numbers in the park, and it will advise you as to what to do next to progress your park to be the cash flow machine that it can be. So we covered a lot today. As you can tell, I'm pretty excited because, number one, it's a huge opportunity, the RV parks, but we do couple that with AI and the new technology today. It's just, there's not a lot of people that are on the front running cutting edge of AI. So you're in early on that game, and that gives you this huge advantage. It gives you a huge advantage in RVs. It gives you a huge advantage in apartments as well. So we covered why RV parks present such a unique opportunity right now. We covered the 15 revenue streams that can dramatically increase your profits. We covered how to spot parks with untapped potential, and the 3-step formula for the cash flow tsunami that I call it. So there's an implementation gap. There's a difference between knowing something is possible, and then there's the gap between implementing it successfully, right? So if you found a great park today, okay, would you feel 100% confident in your ability to conduct proper due diligence, structure the right financing, implement all 15 revenue streams? There's anywhere between actually 20 to 30 different revenue streams, depending on the park. Again, AI will point those out to you. Create the proper management systems on the park. That's another huge technology thing. The shifts in technology allow you to operate parks so much more efficiently now, as long as you put in the right technologies. navigate all the legal requirements of owning a park as well. So what you need to succeed, a complete system for finding, funding, and operating deals, plus $1 million implementation plan. That was the amenity plan that I talked about. A complete marketing guide, that's the entire chapter 7, in an AI business plan prompt, step by step, and AI marketing plan prompts. So these are all the different things that you'll get in the system that I created. This is a system that we use, me and my partner use on a regular basis to buy parks. So you can figure it out yourself. It's going to take you time. You're going to make mistakes, when you're trying anything new, trial and error, and there's a learning curve involved. I'll tell you what, you can definitely do that, but I know this, right? If you work with us, it's a shortcut, okay? We've got a proven system because we're doing it right now, and we'll give you support. The time factor is huge because right now because whenever I go into something, I look for all the information out there. I buy whatever products there are out there to learn how to invest. There is nothing out there right now that really shows you how to invest in an RV park the way this system does. And I created it because there wasn't something out there. It's the same reason I created Multifamily Millions way back in 2002, because nobody else was teaching it, and I was trying to figure it out myself. Same thing with RV parks. What the training consists of, it's a 10-week training. You get 10 modules. You get the implementation tools. You get 70 plus resources of handouts, checklists, forms, marketing templates, weekly Q&As. I already talked about this, the RV Campground Riches bonus number 1. It's the $1 million value add implementation plan. This right here, like I said, feed this into an AI, feed your operating memorandum into an AI for your park. And right there, it's going to tell you what the different amenities could be added to your park, which ones to add first to make you the most amount of money in the shortest period of time. You get all of these that I talked about. Also, bonus number 2 is the complete RV park due diligence system. So RV parks are different from other types of investments, real estate investments, because there's a lot of other things involved. There's food involved. There's a lot of electrical involved. There's it's actual campsites. There's transient people. There's people coming in and out on a regular basis. So this gives you a complete checklist system, so you know all the things that you need to look for when you're buying the RV park. It gives you deal analysis spreadsheets as you're going through the due diligence system. Gives you site-by-site inspection forms, financial review templates, and most importantly, red flag indicators. Okay, so if something pops up on your site that is a red flag, you've got to think twice about buying this particular park. I give you the financial red flags, I give you the physical due diligence red flags, and then I also give you the financial red flags as well. So if they have these red flags, you may be a reason to walk away from that park. I've always, whenever we see a red flag, we look at it as an opportunity first, okay? And we look at it as if, what's the problem? Can we identify the problem? Can we understand the problem? Can we fix the problem? Is it fixable? If the answer is yes, we can identify it, yes, we can fix it, then we move forward, and it could be a good negotiating opportunity. If we see a red flag, we identify it, we can't identify the ability to fix the problem, then it's a no. You walk away from the entire park, because the last thing you want to do is have something blow up after you've bought it, and then you've got problems, and that it's no fun. Real estate should be fun. You should be making money. And then bonus number 3 is the RV Park Funding and Financing Toolkit. This takes you step by step through all of the different, it gives you a lender database for all the different lenders in the regional area that you're investing in that will fund that park. It also gives you all of the national investors, the lenders that will do that park. And also, we do a lot with SBA when we're doing campgrounds, and sometimes they'll coordinate with local banks together. So there's a really big advantage of using the SBA, mostly because you can get in with less down, and that means that you're going to get a bigger return in your park as well. So there's a whole bonus pack on this on how to fund and finance your properties. So total package. The complete business in a box, $2,995. Bonus number 1 is the implementation plan. The business in a box is the 10 modules and all the resources, the checklist, the handouts, everything that we use to run our park efficiently. The value add implementation plan, that's a whole course in itself, $1,995 value. The due diligence systems, again, that's a whole course in itself, $1,995. The funding and financing toolkit, listen, if you don't know how to get your park funded, you're not going to be able to get your park done. Okay, so this just basically introduces you to funding in RV parks and tells you who the players are and when to use those particular players, which parks to use them for. Total value is $9,485 if you to buy them separately, but we don't sell them separately. But I drop it down to $1,995. You will be the third cohort to go in. It's a 10-week course. You will be the third cohort to go in. There's only been two cohorts before you. There's not a lot of people that have this knowledge right now. You will be one of the few, and you can very quickly roll up a bunch of different RV parks and potentially sell them off if that's what you want to do, or you can own them for a long period of time and just love the fact that you have all this cash flow coming in. We also show you there's a management aspect of this as well. So we'll show you how to handle get the right management companies, because we've been through this. We hired some management companies, they weren't that great. So then we figured out and then we started managing ourselves, and that wasn't that great. So then we figured out exactly what we needed in a management company. And the management companies in RV parks, it isn't like multifamily where there's a lot of them in different places. There's a few. So we'll take you step by step too on how to identify that few. We'll actually give you the names of the ones that we're using, and then we'll give you the qualification checklist to make sure that they're going to be right for your particular park. This is 100% guaranteed. If for any reason over the 30 days while you're going through the system, for any reason, it's just something that you don't want to do, just send it back. That's okay. There's a huge opportunity out there. And if you can see it, then come with us, join us for this fun ride. The early bird gets it. At $19.95, typically it's sold. If you go onto my website, it's sold for $29.95. People are buying it on my website for $29.95. We sell a couple of them a week. But what we're doing is we're going to our third cohort. You're with Vinky, so we're going to I gave this discount at the very beginning to the very first cohort. So because you're with Vinky, we're going to keep it down at $19.95. But if you do go to our website, you will see it's $29.95. But we are early. But remember, Starwood is rolling up. Berkshire Hathaway is rolling up, and they are a machine, and they're going to be working at it. The market is so big, and we're so early. You're going to be able to do your own roll up and get out of it, and be able to sell to these guys, and then potentially, live the life that you've always wanted to live. Because you were ahead of the curve. You front ran the herd, as we call it. So what's going to happen next? Go to the URL that Vicky gives you, click through to the order page, sign up. You should be sent some case studies, or you certainly will be sent your password to get into the system. And once you get into the system, you'll see that first module there, and I will be videoed. You'll see me on a video, and I'll take you step by step through the process of understanding the first module. And actually, we used to do it where we released it 1 week at a time, but we've just collapsed that so you can actually self-pace it. And watch it as fast or as slow as you'd like to. So there's a lot of profits. There's a lot of fun in RV parks. This is one of the things I like about this business, is that it's so fun to go to the RV parks that you own, number one, or that you're looking to invest, because they're in great areas. They're in the woods. People are having fun there. It's just a fun place to be. And then when you see a park that hasn't kept up with the amenities, hasn't kept up with the marketing, it becomes even more fun, because you're going to make a ton on that park. So this business is profits, it's fun, and if you can see it, then join us. And if you can't, that's fine too. But this is a big opportunity. So that's all I have for you, Vinky.
Yeah, thank you so much. And we do have a few questions for you. Before I move on to the questions from the attendees, I wanted to ask you these questions. You shared with us all the good things, and I was wondering are there any challenges, or are there some barriers to entry, that a new investor should understand or should know? And if there is, how to overcome those?
The challenges of the knowledge base is because it's a new asset class to somebody that hasn't invested in it before. So you really need to understand the fact that there is food involved, there are activities involved, there's a lot of scheduling involved. But that's where the management aspect comes in. I believe it's chapter 10. It's either 9 or 10, where we actually take you through, staffing, what the optimum staffing level is, what people should be doing when you combine, when one staff member can combine jobs, what jobs they can combine effectively on. So that's one thing. So there's a lot of coordination involved. There's a lot of you shouldn't be managing it yourself. Okay. I've had some people get it and then start doing it and they get frustrated, which, if you don't understand it, don't do it. So what really you want to do is be able to asset manage the manager. All right. And that's not a very difficult thing to do because it's all done by the numbers. So you walk the park, you look at the amenity package that you're going to add to the park. They're overseeing the construction of the new amenities. They're overseeing the new marketing plan. They're overseeing any potential site changes. And then you're basically getting what we call a Monday morning report. And you're watching those plans take place real time. And the Monday morning report actually gives you the questions you should be asking on a weekly basis as you're watching that park progress. It usually takes, if you're buying a park that from an owner that's 60 plus years old that hasn't changed really any of the amenities and hasn't upgraded it, you're looking at a 2 to 3 year plan to upgrade. All right. But the beautiful thing about these parks is they cash flow at day one. So while you're doing these upgrades and increasing the cash flow, you're cash flowing. It's not like a value add in an apartment where, you may be negative cash flow for 6 or 8 or 10 months, and then you start to cash flow. You're actually cash flowing and moving forward.
But when you're adding all these amenities and all that, your expenses are going up too. And also, I was wondering, is it like some property management companies or like we do for multifamily or the other asset classes out there that we can leverage, or how does that work?
Yeah.
Some want to manage.
Yeah, there's national property management companies that you can leverage.
And you also mentioned the yogi parks and all that. There's a franchise too, right? So
Yeah,
franchise.
you can buy Yogi. You can buy a KOA, which
Mhm.
they're good. We considered buying the Yogi for our first one because we didn't really understand it. We wanted to go into somebody else's system, and really understand how to run the parks. And then we just felt that the first park that we were buying, had so much opportunity in it that we didn't want to give it away. Because what the Yogi franchise does is they will take 5% of the profits over and above what they've increased since you own the park. And we thought, well, year one, we're going to be increasing this cash flow by X amount. And we know how to, we figure we know how to do it. So why don't we wait to put Yogi in year two? So when we've already reaped a lot of that. And when we finally told them that, they were okay with it. So yeah, we'd rather be in year one, but we'll switch over in year two if you want. And then when we got to year two, it was like, wow, we learned a lot and did a lot in year one. We don't need Yogi for year two. But there is the opportunity to buy a Yogi or a KOA or a franchise. I know some people that own, like that guy owns 28 of them.
Yeah, I think so. I was talking to somebody and he's part of KOA and he
Yeah.
did mention that is going with the franchise much better because there are, I think, set rules and guidelines that you follow and you kind of follow the suit, even you don't know, you're going to make it, right? Versus just doing yourself, everything is much harder. And then you might be setting your own guidelines that might work, might not work. So I think going in first time might be a good idea to go as a franchisee. But
Well,
so you can guide us better.
I'll tell you what, right? So my mindset was I'm going to go in there as a first time to a franchisee because they know best practices.
Mhm.
Okay. So that was my mindset until we started. I mean, did all this research for about 2 years before we bought our first park. And then we owned and operated our first park for a year or so. And then we started buying other parks. And then, I mean, you can get that system for 1995. Okay. And that will give you this huge amount of knowledge on how to run a park. And then after that, if you think that, hey, maybe I'll use a KOA or maybe I still need a franchise, which I doubt, but you might. But what that does is it saves you all the like a 5% of your revenues fee year after year after year, and that's a pretty big chunk.
Mhm.
But again, it's not. It is a viable option. Let's put it that way.
Mhm. Yeah, no, thank you. So there are some questions from the audience as well. Brendan is asking, is there guidance in the course on finding and hiring a quality PM for this type of asset?
Yeah. Yeah, not only will we guide you on that, but we'll also we ran into a company that it's a national company. They proclaim the fact that they've won awards year after year after year, and for lack of a better phrase, we get screwed by them. And it will also let you know who that is as well. I'm not going to say it over, a presentation like this, but we'll tell you who to avoid.
Mhm. Okay, good. So there's another question from Bob. He says, have you found any one AI better than another? I see on basic chat, they are now limiting downloads to 3 per day. I think if you have a paid
ChatGPT.
version, there is no limit, right? And I think all the LLMs are the same. Doesn't matter what you use. I mean, Perplexity if you wanted to do the research, but ChatGPT is good enough as well for the basic research, I think.
It all depends on what you're using them for. Like I like to use ChatGPT for projects, and for a custom GPT. I like to use Claude for writing because it's really good for writing. I like to use when I do the prompt for the marketing plan. I go into Gemini 2.5 because they're excellent at doing the deep research. Perplexity, I actually use Perplexity as a Google, because it gives me the direct answer. I hear it's a really great research engine. I just haven't used it for that yet. But so each one of these GPTs has its value. It's like they're all really good at something. You just got to determine. Well, that's how I've found. I just mentioned how I use them. But like a lot of them are just $20 a month. I shouldn't say just $20 a month to some people is a lot. But if you get into that higher version, a lot of times you have unlimited.
That's true. And the other thing that you mentioned earlier was when you're using the GPT, it's all about the prompt base. So as
Oh,
long as you have the understanding what you are looking for, you should be able to get the right answers. And then at that point, LM is just LLM. It's a language model. Basically, you can use any language model get the answer what you're looking for. If you do not have the minimal understanding and trying to get something, you're not going to get it no matter which language you use or whatever language you use.
I think the problem is most people ask chat general questions and expect to get really good answers.
Mhm.
And they get general questions, get general answers. But if you can get
That's true.
really good and specific, and there's certain prompting steps that you take with the information that you're putting in to get really good answers on the way out. And even by doing really good prompts on the way in, usually on the first time you don't get the answer you want. You iterate and you iterate and you iterate, and then eventually you get what you really want, and then you save that prompt and you put it in your prompt library. It's like this is the great prompt to use for this, and this is a great prompt to use for that.
And the other thing is when you're prompting at the time, you can figure out, what was missing in last time. So you're adding that, or you're building on your previous prompt. I actually wrote an article too, this releasing on this Friday. Everybody tune in. Follow me on LinkedIn. It's on humanity and AI. That'll give you some insight about AI too. So AI and humanity works together, go hand in hand. So the next question is, are creative or arts and crafts on the activities list? I think this is regarding the parks.
How creative are they?
Are creative or arts and crafts on the activities list? I think you were talking about how you do the different art and craft or
Yeah.
festivals, something like that. You host those. So are those on the activities list? I think that's what.
Oh, yeah. So is the question is, are arts and craft on the activities list? The answer is yes, definitely. A lot of the activities have to do with arts and crafts. The kids love to do, they make ornaments, they do the birdhouses, they do ceramics, they do the tie dyes. I mean, it's all has some sort of creative thing to it, and kids just love that.
Can the parks be used as permanent homes for a time?
Oh, yeah, they certainly can. That would be a limited income source. That way, if you were looking to get like a stabilized income coming in, that's when you would use a park like that. I mean, for me, I would look at a park like that and I would think, can I convert this over to a family operated park? Because I know I'm going to make so much more money. And it would probably take me about 3 years to do that. And some of those people would be probably pretty upset. But it's business is business. So yeah, the answer is yes, but there's a lot more opportunity when you're going after different markets.
Interesting. So there's another question from Brandon. I came in late. Apologies if this was discussed. How do RV parks in colder climates stay viable in the off season, or do you advise only buying in year-round areas, even if they are not close enough for you to personally visit regularly?
Well, the answer is there are a lot of seasonal parks. They're called seasonals that close at different times of the year. Our parks are seasonal right now, and you make enough money through the was it? We're closed for the 7 months that you're open in order to give the investors the return for the full year. So, and then you work on the off season on what you're going to improve going into the next season. So the answer is seasonal parks make just as much money as the ones that are open all year round as well. It's a different management style though. There's a different management aspect because that park is going to close down, all right, and then you have to reopen. You've got staffing issues with that because you're going to have to lay off the majority of your staff except for your manager and your key maintenance guy. Then you have to rehire, but it's just a different type of a model. But it is done on a regular basis. There's so many parks up here, above the freezing line that do close that make a ton of money.
Hmm. Interesting. So they make everything during the season and rest they close maybe.
Yeah. And I mean, and there's strategies that you can use in the off season, like storing RVs and storing other type of equipment for local business owners and things like that. But all in all, it works. It works, or these places wouldn't be in business.
Hmm.
Our
Uh,
park's our park's closing down at the end of next month.
oh,
Uh,
really? And
yeah.
how long is it closed? Just the whole winter? Like,
Yeah, we're closed from our last big thing is Halloween. So we'll have Halloween weekend, and then we're closed down after that. So then we're going to put in a new playground in the off season. We're looking for different upgrades, different amenities that we're going to be putting in the off season, and then it will open back up again. We'll try to get our first campers in there in April
Mhm.
with themed weekends, and then the full season really takes off Memorial Day.
Mhm. Another question from Bob. How does funding sources view RV parks for DSCR loans, etc.?
Yeah, so I mean, there are certain regional banks, there are certain the SBA, there are certain national lenders that fund RV parks. It's a specialty item, and so those are the ones you go to. You don't go to a local savings and loan that hasn't funded an RV park before because they won't understand it and they won't do it. So that's why that bonus, the funding, it's basically a course. The funding course comes in and shows you exactly. You put in your park and it'll tell you exactly how to get it funded.
I think you think this RV parks, they kind of exploded during the pandemic because people were looking to go like outdoors more. And then since then, it's like a kind of new asset class came in that everybody started looking into it, or it's just, I'm thinking of
Yeah, it,
something.
it it absolutely exploded during the pandemic because people headed for the hills and they headed for the parks. They headed for nature. They headed to places where they could be away from people or far away from people. Far away. And that's where we saw the highest amount of occupancies in the park. And then it trailed off a little bit, not much, because all those people got exposed to it, liked it, and now are continuing. And they're introducing to their kids to it as well. So that's why at the very beginning, when I said that this business has legs, it's got legs because of the pandemic and how many people were introduced to it then. The
Interesting.
average age of the RV park owner now has changed from 55 to 65 into the late 40s. So the average age is going lower. It's good.
Wow. That's good to know. So what do you see in your crystal ball? Do you see this as a lasting trend, or how should investors position themselves
I
to
s-
capture this?
All right, look, over the next 10 years, right, those 60 to 70-year-olds that own the parks, they're going to be 70 to 80-year-olds. So during this decade, those people are selling because very few of them are going to go into their 70s owning these parks. So there is this huge opportunity right now. We're in the midst of it. The earlier you get into it, the more opportunities there will be out there. There are other, Starwood and Berkshire Hathaway are involved, but there are other corporations that will see this opportunity and they'll jump in as well. So we are early right now. Just like being in the early innings of an emerging market. We're early right now. The opportunities are there. I've never seen an opportunity like this where so many owners, the demographics of so many owners are up above the retirement age. So that's where it just and they pretty much own them free and clear. There's not a lot of mortgages, and there's a lot of upgrades that need to be done. I mean, it's like the perfect storm, walking into the perfect storm of opportunity.
Right. So if there's any more questions, please use the Q&A or even chat. Ask your questions now because this is your time to ask David live all the questions. But David, thank you so much. I think this is such a great presentation. I really appreciate your time and wisdom today. I enjoyed the presentation during the conference too, but I think I was too involved doing multiple things. I just got the glimpse of it. But today it was like really insightful. It was like a really great session. Are there any more questions from the audience? Please go ahead and ask now. And if you'd like to explore further, about Dave's program. I put the link in the chat. Please go ahead and click on that and you can check that out. I do have one more announcement, Dave, if it's okay with you. I wanted to plug that in. Dave's going to have a 3-day conference from September 26th to 28th. So September 26, 27, and 28 in Dallas is the Ultimate Partnering Conference. And Dave is very generous. He's giving $200 off to all my connections. So if you're interested to see Dave live and connect with others in this conference, please go ahead, use my discount code Loomba. I'll put it in the chat as well. And go ahead and sign up, and it'll be fun to see you over there. So, David, I would like you to talk about that as well. Go ahead.
Yeah, so Ultimate Partnering, I was going to say, can I just do a plug on that? Because Ultimate Partnering is like the most fun event of the year. We've been doing this for 19 years now. And basically what we do is we bring in, we've got the room is filled with about 75% of our alumni and 25% of people that are new to our organization. And those alumni go back all the way to like 2002. So you've got people, so it's all about networking and finding partners. So inside of that room, you'll find money partners in that room, you'll find deal partners in that room, and you'll find business partners in that room. And on the stage, and we do a lot of networking things in there to facilitate meeting people, especially if you're an introvert like me, believe it or not. And then from the stage is all kinds of great information coming from the stage. We have a woman in real estate panel. We're going to have a sponsor panel that's actually going to be sponsors up there that will sponsor deals. We're going to have a Shark Tank where people will present deals. The value of Shark Tank is you get to listen to people present deals. You get to listen to how the sharks dissect them. Then you get a really good understanding of how to present a deal properly. And then I'm going to talk about value stacking on how to really create extreme wealth in multifamilies by stacking value adds as well. And we'll have different guest speakers in there. And it's just a lot of fun. It's a lot of fun. You meet a lot of people. People leaving that event, the one comment we get from the new people is, I can't believe the amount of people doing deals in this room. And that's because they're our alumni students. They're out there doing it. And not only that, it's the attitude in that room. It's kind of like, if you know the Grateful Dead at all, like a Grateful Dead concert, where you go to a Grateful Dead concert and everybody opens up their arms and everybody's like brothers and sisters. That's the way it is here, whether you're new or been with us since 2002. It's like a big heartwarming community where everybody's accepted. They're glad you're here and they'll do whatever they can to help you out. It's an awesome, fun event.
I'm so looking forward to it. Yeah. And guys, please join if you can. I put my discount code in the chat. Loomba, use that to get $200 off. And I think the price is going up as well. Didn't you mention that last time, September 11th or something, right? The price
it's either the 11th or the 16th, one or the other.
16th. Yep. Oh, okay. Yeah. So just go ahead and purchase your ticket before the price goes up. And are there any more questions? Please go ahead and put it in the chat or in the Q&A if you have any more questions for Dave. But Dave, it was such a insightful session. I really enjoyed that. Thank you again. And audience, as always, if you have any questions, please feel free to reach out. You can email me at winky@loombainvest.com. I do not see any more questions at this time. So once again, thank you so much, Dave. And I will see you in Dallas. I can't wait to come to the conference and meet with the people over there and network with everybody over there, and especially meet Jeannie. She's one of my favorites.
Yeah.
Yeah.
The old dog.
Yeah.
She's been with me for 27 years.
Yeah. She's awesome. She's full of energy, all the time. Yeah. So yeah. I'm just can't wait to meet her in person. So everyone, please just, go ahead and use the discount code if you wanted to join for the conference, or if you wanted to join Dave's program on the RV Parks. The link is in the chat as well. Please save the chat. Somebody was asking me earlier how to save the chat. There's a small little 3 dots on the side. You'll see that if you click on that, you'll be able to save the chat. So do that and save the chat so that you won't lose anything. And also the session is going to be recorded, and my team is going to edit that a little bit, and they're going to send it out either tomorrow or Monday. The recording is going to be out, and all the links you're going to see with the recording as well. So if you miss out today, don't worry, you will get to revisit the whole thing again. So once again, thanks, David, again, and everybody joining today. Thank you for joining, and keep building, keep growing, keep aligning your wealth with your purpose. I'll see you next time. Have a good one. Bye.